What's up, guys? Welcome back to the Business Blocks podcast. On today's episode, we'll be discussing 11 end of financial year resolutions for your small business. As always, I'm joined by Dale Kitchen of Tax For You. What's going on, Dale?
Well, it's been a very busy week this week. There's been a number of inquiries from new people who are moving around, so that's always good. We had a new client I went out to the other day. They set up everything themselves, so it was a partnership of 3 people. So they set up a partnership themselves, which is a terrible idea. They set up the GST themselves, which they didn't need to be registered for. Just a bunch of problems, which I sort of went out and just cleaned up and tried to move them away from. But it sort of just goes to show that it's better to have that conversation in the beginning rather than wait, a bit of time before you go see someone.
Is this a common problem you see?
Generally, you don't see people who go so far into setting it up. I know people like to set up partnerships themselves because it's basically free. You can get a trust set up for a small price. A company, it's a bit more expensive, but a partnership is absolutely free. You just got to go through the registration online, and then you're ready to go. So it's just a scary thing, and whenever I get out there, I tell them, partnerships are unlimited personal liability for anything in the partnership. So be careful and try and get away from it as quick as you can. So, don't stick with it too long. Another client who's looking to buy a new business. Little bit of audit letters we were dealing with people who just had a letter sent out saying please explain, so a couple more of them. I had an email today from a entertainment business, so we're just chatting to them, trying to get them on board. So it's not a bad week.
Okay, that's very good.
Yeah.
Well, one of the stories I just wanted to get out there was obviously it's made it to mainstream media that Bitcoin has broken through 10,000, something that we're big advocates of the cryptocurrency and the digital assets. And a lot of media leading up to the 10,000 figure, everyone was talking about when it reaches 10,000, the public will be involved, the retail investors will come. And it was funny, the minutes that it reached 10,000, I got a text message from a friend that I hadn't heard from regarding crypto in about a year. And he's like, check out the price of Bitcoin. So it was very funny that they'd spoken about how at 10,000 it would bring in the retail and put it back in the public eye. And it took minutes for my friend to remind me that he's back into cryptocurrency now.
Oh, God. I think it's a good headline. Bitcoin 10,000. If it ever does get to 100,000, they'll probably do the same again. But I don't know. It's a funny one. I sometimes, some days I see the value of it and some days I don't.
It's early technology.
Very early. And I time and time again, I get very surprised with how early it is. I mean, even with the love of our life Ripple, you can see that they're still in the very, very, very early stages of selling it to people, like just still testing. And you think, well, it's a huge idea. I've seen that Swift have announced that they're going into crypto as well.
Yes.
So that's a big tick for what Ripple's trying to do. Whether they do it well or not, time will tell. But it's an interesting age. We'll be rich by the end of the month.
Yeah, or the next month or two. Give it a couple.
Yeah. Oh, okay. Sorry. Got your Lambo bought?
So if we bring back to the present a little bit, obviously we're recording this a week before the end of the financial year. And just an article that came through my inbox this week was from In the Black, which is a CPA magazine, CPA. You pay $1,000 and they give you an email each week, which is a pretty good deal.
Yeah, that's how they work. You get a piece of paper.
Yeah, exactly. Yeah, you get a nice sticker to say you're a CPA. But the article that was titled 11 End of Financial Year Resolutions for Your Small Business. So I thought we'd just run through a couple of them, and then if you could just give your thoughts and expand on them and think if they're really necessary for small business and at what sort of stage.
Are people going to actually do them? I mean, that's always the hardest part. So everyone's got all the best ideas, but yeah, I think come July 7th, people aren't following through with anything that they've set up at end of financial year.
Yes, the next job's coming along, the next project, and that's what it's straight into.
It's easy to move away from. It's hard to follow a path and fail, but it's easy to move away and say, oh, I'm too busy. Oh, well, sales aren't what I predicted or wanted them to be, but, you know, it's not my fault. I'm just busy. So, yeah, I think that's the biggest trap a lot of people fall into.
Does your accountant or tax agent or registered agent, do they become like an accountability partner with that then?
With what?
Well, if you sit down with them and go over a plan or a strategy or review things, can they then be seen like a personal trainer that keeps you accountable?
Yeah, I think it is very much like a personal trainer. If you really go into it with someone else is going to fix it attitude, it's not going to change anything. But if you work with someone and you go to them and you grab their advice and you say, all right, I'm here, what's coming next? It's a match made in heaven. But yeah, it's still got to come from the person. They've got to be open to change. They've got to be willing to accept things that are new to them and challenge themselves, it's hard to do. I mean, it's hard to do for everyone, from the small brand new companies to the $100-200 million CEOs. Everyone finds comfort in the familiarity. I don't know if that's right. Of what they did yesterday.
With the familiar, yeah, well, that's fine.
Yeah, familiar, that's the one. So yeah, that's the thing. I think bouncing ideas and talking to your accountant has been something that people love to do, and I think it does provide them comfort around what they're doing and you know that they're heading in the right direction. So yeah, but got to come from within. It's got to be your push.
At the end of the day, you've got to drive your business, and accountants can only support it as much as you put in.
Yeah, if you're coming to us with, suggestions and ideas, the likelihood of your follow through in that's going to be a lot greater than we say, all right, do this, and then you go, well, yeah, nah, it's fine.
Yeah, we've found that with quite a few customers. Rational suggestions have just fallen on deaf ears.
Yeah, and big decisions where we could show an actual dollar saving, like significant dollar savings, and we say, if you do this, we will change your cash flow by this or save you X, and they just bury their head in the sand because it's not easy, and it's a lot of work, and it's a new area. So just be open, be ready, seize the day.
Okay, so the first one off is do a financial health check for your business. So identify strengths and weaknesses and potential threats to your business. Look at liquidity and solvency. That's very high level.
So is it liquidity or solvency? I think that's always a good position. I think the bigger your company gets, the harder it is to sort of know what your actual net position is. So, if you've got, say, 10 staff, you're sort of running, say, 4 to 5 million turnover. To know where your net position is at any point in time is probably a tricky thing. So I'd suggest that you do get that annual report. A quarterly report would be a lot better, but I can see an annual one would be a very good thing just to sort of get a feel for where you are, and you say, all right, I am this is my ground zero, so by the end of the year I should be at X, and when I get to X, I can do this with it. So yeah, I rate that one, yes.
Okay, so then number 2, so once you've done your health check, revisit your strategic plan. So address weaknesses identified in the health check, create a work plan, set some due dates and some responsibilities for the upcoming year.
Yeah, I think so. I think it's generic enough to sort of say that it is something that you can use. If you're going to do that, I'd have a very specific goal in mind. So a 12-month goal, and then work back from that. So, my goal at the end of the year is to turn my business from 30,000 to 110,000. All right. So what does that look like each month? Goal your year out, set your stages, set your reminders, and address it throughout the year. Yep. Perfect way to move through the year.
Yeah, and probably to complement. Yeah, keep going.
No, that's all I got.
Nothing else to add. And then to complement that, it'd be draw up a budget for the new financial year.
Budgets are hard. I don't know if I like them or not. It's, most businesses, I don't see a lot of area where you can change the spending structure unless you're sort of growing or contracting. Everything is it's sort of pretty fixed. There's not a lot of fat in most businesses. I know that there are some who have a lot, and they sort of, the more fat you have, the less likely you are to cut it. So you sort of, I'm not a fan of budgets.
It maybe depends on your goals. If you have a profit target in mind, maybe the budget is done as secondary to the profit target, and you work backwards. Always,
as long as there's a reason for cutting it. I think if you just, if you're just cutting expenses or really keeping things tight just to stick the money in your pocket, I generally find people aren't as into that as if it's more do or die. All right, the business is failing. We lost $100,000 last year. We need to cut X and X and X. Then, 100% do it cash flow. But most people just sort of flow through with what's in the bank.
Yeah. If the money's there, the budget doesn't come into play. It's not looked at after it's been created. The only other point I'd make with this budget, potentially it can have the effect of, if you do review back to it, it may find it that you don't buy certain things or make purchases because it isn't in the budget. Maybe adds a second layer of, do I really need this?
To an extent. Though.
But again, it's something you have to continue. Like, most budgets aren't looked again after they're created, so...
I'd be more inclined to focus in on most likely a marketing type budget, and then what I'm getting from that. I think spending more time analysing the marketing budget is probably better than, trying to play with. So your big ones are going to be your rent, it's going to be your staff. Generally, they're the big two, and then you just sort of lose, the rest in insurance and phones and cars and all that sort of gear.
It's all fixed. Fixed in a range. Yeah.
The only thing that you're really spending on that can get you sort of a result is advertising and sort of investment to a certain extent. So, advertising, if you want to get a good result, it's probably a good place to start.
Cost-centered budget, a smaller budget for a particular area of the business.
Yeah, but it's, if I was doing 200,000-300,000, I wouldn't be putting time into a budget. If I was doing 10 million, then you're starting to get into the realm of department budgets. So it does change a little bit, but not a fan.
Okay, next one up, prepare a cash flow. I probably think this is the most important out of what we've seen so far.
If you want to do something, a cash flow is a must. So if you are trying to change your business in any way, by either increasing the sales, adding new items, creating something, building something, designing something, putting on new people, getting, expanding the customer base, getting a salesperson on, all that takes cash flow. So I think factoring in where the money's going to come from for that, and then sort of sticking to the plan, is probably the best. Is the best solution, because growing, actually, I've got a business that is it's a trucking repair business, and they do really sort of bigger type customers, and they've got sort of $300,000-$400,000 worth of materials that they buy for the trucks, and they're getting paid on a bi-monthly basis, but have to pay their creditors on a monthly basis. So cash flow for them was crazy. So in order to grow, they needed to get cash flow before the money came in, and it was a nightmare. But yeah, cash flow, hugely important, and I think knowing when to borrow and how it's going to be paid back and sticking to that is key.
Yes, yeah, and especially in inventory-based businesses where you need to negotiate payment terms around it. It may be 30 days, 60 days, 90 days. Or even I've worked in businesses where customers had 30, 60 or 90, even 120 days to pay. So in those cases, the cash flow is certainly a must.
Yeah, and you can make tweaks to your invoicing, and your customers to say, all right, if we make it a 15-day payment term, how is that going to affect things? Or if we speak to our creditors and say to them, can we push this out by 10 days? And, so most of them, I mean, that's a game that most people play too, is, all right, it's end of month, but when are they going to really turn the account off? And you probably get another 2 weeks on top of that when they start to really push the button. So, yeah, a lot of areas and a lot of things you can do to play with cash flow, but very important. It's the lifeblood.
And what you can use to help your cash flow is ensure you have finance options. So all businesses need finance to fund ongoing operations and growth. It's good practice to have some surplus finance available to cover business contingencies and taking advantage of new opportunities.
Yeah. When you want money, you'll never get it. That's the biggest problem with business these days. So, bloody banks.
You will
Let's
get
on
money.
the banks.
You will get money. Well, I've seen the ads, though. I can get $5,000 in a minute.
Yeah, exactly. And you're paying for it. That's the thing is that when your figures are poor and you really need the money to stay on top of things, let's say you're growing, right? So let's say we've increased advertising, we've increased, customer spending, we've increased stock. Let's say it's a stock business. And our profit and loss is starting to look pretty miserable. The banks are less likely to lend. So if you had have spoken to them before all of this and teed something up, even if it's a loan with an overdraft, an offset account that you can just put the money and set it on that, you will get it a lot easier than if you try and do it at the last minute. Yeah, planning, going back to what we were saying before, planning the year out and sort of working out when you'll need the cash and pre-organising the funding is a huge thing. And banks, my God, banks in 2019, let's date the podcast, are absolutely horrendous to deal with. If you want to get finance for something, it takes months, and there's so many hoops, and you're dealing with just people who are just ticking boxes. And what's happening now is the banks, you're dealing with different departments. So legal is a separate department to the person who fills out the application, and then there's another credit department who does the final approval. So they've shifted the decision making to actual centres, rather than one person making all the decisions and pushing the loan through. Now, what that means is that the person you're talking to at the beginning isn't the one who makes the final decision. So they can say something to you, and I'd say 8 times out of 10, it won't be how it pans out. We had a customer who was getting a housing loan a couple of weeks ago. They had to come up with another $36,000 on top of what they originally had, just so they could get the loan, because it bounced off to credit. Credit said you're too old, so we need you to pay an additional amount. So he paid that amount, then it bounced off to someone else, and they said, no, you're not quite there. We need another, $26,000, and then it was $11,000. So 36,000 all up. Yeah.
37, yeah.
37, sorry. or 25, I can't remember. But the moral of the story was that where you start, you can speak to someone, you can get all your ducks in a row, say to them, okay, I've got this much money, and they go, yeah, come in, we'll give you the loan. You'll sign up for the house, and then you'll jump through 55 hoops, and they'll ask for more money, and they'll make your life miserable. And that's not the only story we've had of that. We've had probably 6 or 7 others sort of pretty much the same.
So this is leading on from the recent Royal Commission.
Yeah. So the Royal Commission, and so what I heard is that the central bank that governs the rules around the bank has really tightened restrictions about what paperwork they need to be provided with, and as a result, it's not the tightening of the loan information hasn't been coming from the actual banks, but the central bank. So it's their reporting body that makes everyone's life a misery. Okay,
so plenty of lead time if you're looking to use bank financing.
We had a refinance that took 6 months.
Okay.
So that was a refinance on a building project that we had. So building stopped for 6 months while the banks tried to pull their finger out and get things going. Now, and it's a refinance. So we'd already been through the application, been approved, and it wasn't a huge amount. So, yeah, crazy. Early.
No customer loyalty.
Not anymore. It goes one way, not the other.
Now, the next, we've got a couple more here. There's a few that we won't really go over. They're not too important, talking about taking advantage of opportunities. I think that is pretty obvious. Avoid record-keeping mistakes, which is, record cash and income and expenses. I would speak to your accountant or bookkeeper if you're having problems with that. We certainly can help you with them. But I wanted to talk about they've written Go Digital here. They say speak to your CPA Australia accountant whether you're doing the best job for your business going digital. I'd suggest maybe the CPA accountant isn't the one to speak to necessarily. I don't know how up to date they are with technology these days, but I wouldn't go to any old accountant as your first option for technology. Certainly tax for you. We're on top of everything.
A CA is better than a CPA? Is that where we're getting at here?
I would, accountants, technology and accountants, you wouldn't necessarily stereotype them too well together.
No, and I think the baby boomer generation, and I hope we don't have any of them listening at the moment, but hello to all the baby boomers. The baby boomer accountant is sort of at the end of his days, and he's not liking the changes, and he's resisting as much as he can. So yeah, technology is a sort of a not a great thing. But at Tax for You, I have a double degree. So I have a degree in information systems and in accounting. So, it's our bread and butter.
Yeah, exactly. And also, I guess we can look on the flip side is maybe it's a question you do ask your accountant to gauge how up to date he is and if he's in modern in a sense. So maybe if he comes back, if he can help you, great. But at the same time, if he can't help you and tells you not to worry or pushes you away from technology, maybe it's time to look around.
Yeah, because it's hard to keep up with all the changes. What the programs are today, they won't be in 12 months' time. So, and there's just so many of them. There's hundreds of them. So, working out what works and what's good for the customer takes time. We always put a section of our week away. Everyone in the company does. To put a bit of time away just to look at what's new in the industry, what's changed, what can we give the clients. We're always searching for the holy grail of this one program that does everything we need. And, we've got a long laundry list. So
does not exist.
No. And yet. And I think it's a case of yet. But it will exist, and by the time it does, I think the robot overlords won't let us use it.
Yes, we won't have any control over it at all.
Yeah.
And then last one on here is review your marketing plan, which is talking about sales incentives for staff, focusing on sales for high margin products, measuring success of each promotion and campaigns. And I think, the marketing plan is probably right down on your list if you're talking small business. As the business grows in revenue, it becomes more important, but I wouldn't necessarily have marketing plan. If you only could do a few plans in preparation, I wouldn't have it right up there.
Yeah, I think it's where the money comes from. If you're getting enough customers, I don't think it's a huge issue. Just sort of working out where you're going to spend your time is probably the big thing. Yeah, it's an important one. I think marketing is, in 80% of businesses, is probably the most poorly done thing, I would say. I don't think a lot of people know how to market properly. So I doubt they could write up a good marketing plan. That's probably the other issue.
Maybe that's a third party to come in to get some advice, to even just a consultation to get you in the right direction, or again YouTube and maybe
actually
find some information.
Last Friday we had a business meeting where we met a few people from a few business leaders and motivational people. We had the red balloon lady come out. What was her name?
Was she CFO or CEO?
Yeah.
Naomi Simpson?
Naomi Simpson, yeah. Naomi Simpson. She started a small company and grew it to what it is now, purely based on marketing. She had a marketing background, so she was a marketer from years ago. She took a concept, marketed the absolute hell out of it, and look where she is today. So that's probably a good example of marketing done very well. Just very switched on, right place, right time. But she was saying that they have algorithms that analyze their customer in some way. So there is a so the algorithm goes through their customer database and pulls out, times in when they can approach customers. I may be even making that up. I don't know. She didn't go into detail, but amazing the stuff that she's doing and that sort of next level. But going back on it, marketing. She started with marketing, didn't really have a lot of business sense, but marketing, if done properly, takes you to the moon.
Okay, well, we're out of time. What do we have coming up next week?
Oh, God. I haven't even thought about next week. We were going to go back to making or breaking a business. So I just think we go to, where you should spend your time, what your day should look like, what you should be putting more energy into than other things. And I think we'll move on to that sort of area and see where that takes us for the Fishing Basics podcast.
The fishing basics, was that?
Yeah, fishing basics. Business basics? Business blocks? I can't.
Small fishing basics.
Exactly.
And also over the hopefully next few weeks, we can have we'll have a few customers come on and have a chat about their business and how they got to where they are and what they see the future of business is looking like.
Yeah, I think I know one person who's probably pretty interested. I'll have a chat to him.
Surely there's plenty of people that want to chat about all the good things they're doing.
Yeah, I think so. I think it'd be out there. We just got to put it out there. I wanted to put a bit of base into it and sort of, learn our craft and not be. I think we've moved along a bit. We're not as terrible as we were. What was it, a month ago? How long have we been doing this for?
This is episode 7.
So 7, so nearly 2 months.
Yeah.
Jesus. Wow.
Up and up and up and up. Okay, I'm off, Dale.
Are we sponsored yet?
Soon. Hopefully.
Okay, see ya.
Negotiations.
All right.
I'll speak to you next week.
All right, see ya.
Thanks for joining us on today's episode of the Business Block Podcast. If you have any further questions about single touch payroll, get in touch with us, www.taxforyou.com.au, or across all the social medias. Tax for You Melbourne should be able to find us on YouTube, Instagram, Facebook. Thanks, guys.